afternoon and welcome to this Baldwin CPAs webinar. Before we get started, I'd like to review a couple of housekeeping items. First, this is a listen-only webcast. There is a chat and Q&A button at the bottom of your screen where you can submit your questions. We will try to get to as many questions as possible during this hour. However, following the webcast, we will be publishing the slides, handouts, and a Q&A to our website. You will receive an email with the link to the page. Welcome to the Baldwin CPAs webinar, Consolidated Appropriations Act of 2021 and PPP2. The Consolidated Appropriations Act of 2021 was passed by Congress on December 21st, 2020, and later signed by President Donald Trump on December 27th, 2020. This act provides additional relief to those experiencing financial hardships due to COVID-19. During this webinar, members of the Baldwin CPAs team will walk you through the new updates regarding the act, provide an overview of new second-round Paycheck Protection Program loans, PPP2, discuss PPP loan terms, and review the new Simplified forgiveness application, along with other important points. They will also be available to answer any questions you may have at the end of the webinar during a Q&A session. Our presenters today are Lisa Devon Foley, CPA, CGMA, and accountant Matthew McKirahan. I will now pass the presentation over to them.
Thank you. Glad to be back. I don't know, Matt, maybe we need to come up with a catchy slogan for our show. I don't know.
It's true.
But we're glad to be back. We're glad that they've issued a second round of PPP stimulus that we can talk about and help you all with, that trying to get the economy and employment back to where it needs to be after the pandemic. And I know we're still in the midst of it, but hopefully we're seeing that come closer to an end than we were when we started this process and these shows back in April of last year. So I'm glad to have you all here, and hopefully we can give you some good insight into everything that has just been released and get you on the way to doing your applications and get you on the way to getting your money back. Hopefully, I think what we've learned through this process, I don't think there will be as many unknowns in this application process as we have had last year, and kind of drinking out of a water hose. So I think this year, this application process hopefully will be a little bit smoother. I think they've lined a lot of things out on the beginning. Obviously, there's always questions that have come up now that the guidance is out, and we will have to wait on some clarification, but I can assure you it's nowhere as vague as it was the first time around. So I think we all feel better about that. Matt, I don't know if you agree.
No, I completely agree. I think the first time we were all kind of just taking a deep breath and trying to make our way through the unknown. So this time I feel like it's known and we can kind of make some headway before we start.
Yeah, and like we said at the beginning, just if you've got questions, put them in the chat. We'll try to get to as many of those as possible. But we'll go ahead and get started. We've got several slides that we want to go over with everybody and kind of bring things together. So what we're here to talk about is on the December 27th, there was a $900 billion relief bill signed into law. So in that $900 billion, $284 billion was allocated to PPP funding, and that $35 billion was back for first-time loans, and then $15 billion for small banks. So that they've kind of, instead of all that getting scooped up the first time, they've kind of put some things in there to kind of help with that situation. So then after that, the SBA and Treasury issued 2 IFRs on Wednesday of last week, I guess. Yeah, last week already. That kind of gave us more guidance, and they did this before they opened up the process, which is kind of nice, because if you remember last year, we were getting these updates continually, even though the process was open. So that made things a little bit hard. But the first IFR was about 82 pages, and it basically consolidated all the rules that they had piecemeal released back over the last 8 months. So that kind of just put it into one place. And so that was a good summary and bringing that together. And then the second document they issued, 42 pages, really dealt with PPP2. And that's what we're going to talk mostly about today and give you all an overview of what that looks like. But just know that if you are going for a second draw, PPP2, as we're going to refer to it, you had to receive the first one. So even if you didn't get the first one, they have money available for you to still go back and get the first loan, and then you could also apply for PPP2. So that's why they made that additional amount of PPP1. And if you remember, PPP1 came in 2 slots. The first one was used up really fast. Then they allocated a second round of PPP1, and all of that wasn't even loaned out. So I'm sure that money was rolled into this in some way, but you know, I don't know that there's going to be the rush that we had last time, thinking money was going to run out. I don't think we all have that fear quite as much as we did that first time around. All right, so they did release 2 new application forms January 8th. It's very similar to the first PPP loan. We've looked at those. We've worked on a few, and you still make some certifications. They have added quite a few. They've dropped some certifications. There were some certifications about if the owner had some felonies and things that they didn't qualify. They've dropped that. There's not been a whole lot of talk about that, but they've added in some things. There's some additional certifications that there can't be any ownership from China in your company, that you can't have political lobby activity. There's some new things in there. I don't think earth-shattering probably doesn't apply to 99% of our client base, but as you're working on your application, make sure you look through those. There is about 1.5 pages of certifications, but they're very poignant and trying to avoid certain things. So they dropped some, the first ones, added some different ones, but make sure you're reading those. So this week, January 11th, small community banks were able to start accepting applications. I don't know of any, Matt, I haven't heard of anybody this week yet going. Have you?
I have not. I've actually spoke with multiple here in the Madison County area, and they are not accepting any applications. Basically, they're allowing you to kind of go ahead and prepare, but they are actually not accepting and submitting to the SBA at this point.
Yeah, and there was another caveat that I don't think we have on here, that stipulation for minority-owned businesses. I think they got a couple extra days too. So technically, the application process is supposed to be all open now, but in our talks, most banks haven't started. And there was an article that came out last night that I think it's a graduated scale that banks on certain sizes, like I think there's some banks that can't even start really to next week if they're bigger banks. So they are giving a little bit of preferential treatment to smaller banks because they don't feel like they probably have the sophisticated systems electronically to do that. But what we have found from talking with the banks is that even the smaller local banks are working on electronic portals to make this a little bit easier. And we've seen that throughout the forgiveness process of PPP1 as well. But this PPP2 application process is going to be open until March 31st, I guess, or until money runs out. But that's kind of our time frame we've got to work with. So key things to know about the second draw, it's really mirrors PPP1. And that's been a little bit of debate in our profession of what, if some of that still applies, but generally the calculation is still 2.5 months of payroll. At this point, you can pick 2019 for your average, or you can use 2020. But technically, everything is calculated the same way in the requirements. It's still 100% guaranteed. There's no collateral, no personal guarantee, 1% interest, and the loan, if it's not forgiven, matures in 5 years. So here are the general requirements to see if you meet PPP2. So you have to have 300 or fewer employees. I believe this number was 500 on the first round. And then if you're a multi-location business, you can count your employees per location, not the whole company. So that was 500 on PPP1. So they have lowered that down again, just even further targeting small businesses. But the biggest requirement that you're hearing in the news and the requirement that takes a little bit of legwork if your financials aren't kept up to date is you've got to prove a 25% reduction in your gross receipts for any quarter in 2020 as compared to 2019. So that takes a little bit of work. And in the fine print, one of the things I read this week, which was interesting, I think you're supposed to pull sales tax out of that. So if you're a retail type business that has your sales tax lumped in your sales line, you're supposed to back that out, because if you're close, that could probably make a difference. But some things that aren't in gross receipts that we are aware of right now is the EIDL money, the idle loans, and then PPP number 1. You do not count those in your gross receipts. And from everything we've read, it appears to be calculating based on a calendar year. We figure we'll get more clarification on that, but we have lots of businesses that run on fiscal year ends, so their quarters are a little bit different. But I think to be safe, we're going to calculate everybody on a calendar year until we hear different. And most likely, it's going to be a very rare case that if you switched your fiscal year quarters, it would have to be something very cyclical to not throw you out. And on some clients that we've already worked on to this point, what we're seeing is most clients are meeting this in the quarter 2 comparison. So that April through June of 2020 has tended to be the lower quarter compared to 19, but it could be any quarter. And I think there's also some verbiage, I can't remember, Matt, if we go into this, that you can also look at it on an annual basis too. If for some reason the assumption is if you meet it for a year, then you had to have 1 quarter that was under that. But what we have found, it's going to be a lot easier to prove 1 quarter and just supply that information. And then the third thing we've got on this screen to discuss is that to be able to apply, you have to have used or will use the full amount of your first PPP loan before the second one is dispersed. And that's really not been a problem. We've been working through a couple hundred applications for clients, and most everybody, once they move that to a 24-week requirement, everybody's been able to spend it all on just payroll and not even pulling in other expenses. So that is the third bullet point there. All right, Matt, I think you're going to jump in here and talk about gross receipts.
Yes, just wanted to kind of hone in on this. Obviously, this is kind of the biggest caveat with PPP round 2 is that 25% reduction in gross receipts. And so they've come along and basically given us some guidance. They've actually referred us also to some IRS coding from the tax law in terms of how to make sure we understand what gross receipts are. But in general, it's going to be all revenue in whatever form received or accrued and in accordance with the entity's accounting method. So for instance, if your cash basis tax return, it's going to be on the cash basis type thing in terms of accounting your gross receipts. And then if your accrual method, obviously you're going to be doing the accrual method. But some things that are included in gross receipts, and then Lisa, I know mentioned already some that were excluded. Sales of your products or services, interest and dividends is included, rents, royalties, fees, commissions, and it's obviously reduced by returns or allowances and or discounts given as well. And then, so with that being said, that's kind of what's all going to be included in gross receipts when you do that calculation. And basically, as long as if it's all in one line, we have had some clients where all the revenue is in one line. We will have to just make sure whatever's included in that line item, we decipher what needs to be included and what doesn't need to be included. So just want to make sure we touch base on gross receipts definition.
And one thing, Matt, I did read this week that is noticeably missing from this is if you have any capital gains. It does specifically say that you do not have to count capital gains in your comparisons.
Very good point. So getting back to a little bit of the second draw and what borrowers can expect here, we talked a little bit about the calculation. Lisa mentioned it. It's still 2.5 times your average monthly payroll. The one thing that is different is I believe the first round was a max of 10 million. And so that has been reduced to 2 million. And then you can see there the second bullet point with restaurants and hotels. If you have a Naxos code starting with a 72, that's usually reported on your tax return, you're actually going to get 3.5 times your average monthly payroll costs. And so that's really trying to hit that really hard hit area there for shutdown, in-person dining, things of that nature. That was really hit kind of hard there. They're trying to give you a little bit extra. One thing that's important here, and Lisa kind of had mentioned it, when you're using the calculation for payroll costs, there's kind of 3 different windows now you could potentially use. You got 2019, you got 2020, and then you also have 12 months prior to application, the application. So for instance, if we're not doing right here at the window of say January 15th through January 31st, if you get to the end of February and we've had some pretty heavy wages in the first 2 months, that might be something to look at, to use the 12 months prior to when we're actually applying. So just something to note there. They did actually add that little extra caveat there. The cover period, they're still kind of using the 8 and the 24, but one difference is now we get to choose how many weeks we want to cover. Best practices, we kind of did this on a previous webinar when we're talking about forgiveness, would be to go ahead and elect the 24 weeks. And then that way you can use payroll primarily. It's a lot easier to substantiate and move forward with the forgiveness part. So, but we do get the option to choose 8 through 24 weeks. I wanted to touch base on some of the documentation that's going to be required. It's very similar to the first draw of PPP money. And so whatever you kind of did on the front end, you'll have to do on the second end. One thing that's a little bit different, if you are going to use your 2019 payroll costs, obviously the lender, if they're still doing it, the second round, I will stop there because we have noticed that some lenders aren't doing PPP round 2. And so make sure you that's kind of a best practice. Number 1 is just to check with your lender, make sure they're doing PPP round 2. And if they are, and you end up using 2019 figures for payroll costs, then we won't have to resubmit those documents that we supported on the front end. And that's good news. We don't have to recalculate those payroll costs. I know the first time when we were going through PPP1, the rules changed multiple times of what was included in payroll costs. And so we won't have to worry about that much this time if we're using those 2019 figures. But then again, we can also use 2020 figures or the 12 months before we apply. For loans over 150,000, we obviously are going to have to submit documentation on the revenue decline, that 25% reduction. And you can do that in a couple different forms here. Primarily is going to be that second bullet point, the quarterly financial statements. If your books are kept up to date, that's usually going to be the easiest route to make sure that you can substantiate that 25% reduction. We will talk in a little bit about like Schedule Fs and Schedule Cs. You can use your 2019 and 2020 tax returns. Not too much pressure on us, but that obviously means some upfront work on our end to how to get those 2020 tax returns pushed out the door as quickly as can to help you guys get that if you're using that form. And then bank statements, if you're on cash basis, you could use bank statements to help substantiate that 25% reduction as well. Something to note here, for loans under 150,000, you're not necessarily required to, when you go to apply for PPP round 2, to document that 25% reduction. I will say this though, best practice is to go ahead and do it because you're going to have to do it on the forgiveness end when you go to get forgiveness. So the sooner we can just kind of make sure we have that substantiated, we can file that away and hold it forward. But if you are someone who maybe has to do some updating to their books and haven't quite got it all up to date in your loan, after you've calculated your payroll costs, it's going to be less than 150,000. You can go ahead and submit with the new application that they have put out, that you don't have to submit your actual supporting documents for that. One thing to note, as always, the SBA can request this documentation at any point in time. And then, like I said there, we'll need to do the comparison anyway to determine eligibility. So for forgiveness. So I wanted to talk a little bit about some other PPP provisions that was put into that 42-page document. And then there was a couple questions on the IFR and the 82-page document. The first one here is actually a bigger point that we've come across here recently that's going to affect a large portion of our clients. But Schedule Fs, if you have a Schedule F, they've kind of changed how you calculate your gross payroll costs. The first round was all based off of net income on your Schedule F, but they have changed that now to actually be gross income. And so you're going to be looking at your gross income to a max of $100,000. So the max for a Schedule F, if you've got, say, $150,000 of cattle sales, things of that nature, you're going to have to reduce that to $100,000 and then divide by 12 months and multiply by your 2.5 times. So roughly around a $20,000 loan there that wasn't there on the front end if you've kind of had a loss there on your Schedule F. So that's one that has actually come about that we're actually actively searching and trying to make sure we can help our clients with that, because with there being first round money as well, and if you didn't get as a farmer, you didn't get the first round, we can make sure we get the first and the second. So having to do a little bit of legwork there, but yeah, that is all based off of Schedule F and that new requirement of gross income instead of net income. Borrowers whose loan amount was impacted by the changing guidance, as mentioned, a good example is a Schedule F there right above it. But if your loan is impacted, I know on the first round of PPP, I believe it was the first 2 or 3 weeks, Lisa, and you can, if it's later than that, you can tell me, but there was some talk about actually taking out payroll taxes, things of that nature. And so if you were on the front end and you had actually gotten your loan already and didn't get to update that, you are going to be able to go back and get the actual amount that should be based off the new guidance. And then obviously if there's any guidance that we kind of go over that has changed your loan amount from PPP round 2, we can go back and get that updated as well. And we have had a few clients that that's going to affect. And so we'll definitely work with you on trying to get that modified.
And then I think one key thing to mention there, Matt, is you can't get the amount changed if it's already been forgiven, right? So I know we had some people that applied really early, but keep that in mind. If it's already been forgiven, you can't go back and change your PPP1 amount. And actually, as before we came in this webinar, I saw an article that someone had forwarded that talks about that. And I think I have that question into a bank, and they were going to let us know what the documentation needs to look like to fulfill that. Because we did have a few, I think maybe probably just the first week that we were helping with applications, that there was some changing guidance with the payroll taxes. So we're definitely looking at those as we're working on forgiveness applications and checking those. And if we can amend the first one, we will do that.
It wouldn't be a PPP webinar without talking about the other end of it, forgiveness. And so we've kind of definitely taken the last couple months here and worked through that, but it's going to be generally the same as PPP1. We have actually put a question out to the ICPA. We did get a little bit of a clarification and answer with also kind of hold on until the final guidance comes out, hopefully next week. But basically the FTE part of this is still going to be in there. We had gone through and read the 42-page guidance, and it didn't actually mention much about the full-time equivalent requirement and obviously any safe harbor dates or anything of that nature. We do know and feel like those are going to be in there as they were in PPP1. We're just not quite sure of the dates yet in terms of the safe harbors and things of that nature. We do expect that to come out with the forgiveness IFRs in terms of that nature coming out hopefully next week, and maybe when the new administration kind of gets in there and they roll that out. But generally the same as PPP1. There are some extra expenses now that can be included in your forgiveness. One is the covered work protection expenditures. So PPE, if you've got costs to comply with COVID-19, masks, hand sanitizer, things of that nature, and you've bought in bulk, and that can be sometimes a big number, all depending on your industry and what you're doing. But those are now allowed to be used as cost to forgiven. Covered supplier costs. This one kind of costs a little bit of surprise, but basically you have a main supplier that's a main source of your business. I've used a restaurant, for example, the food industry. You can see their supplier there, the food, in order to make their business is going to be a cost that can be covered there. Covered operation expenditures, such things as like software, cloud computing, other HR and accounting. We're still waiting on a little bit of guidance of what other HR and accounting references. That was kind of a gray term there, so we're still kind of waiting on that. Covered property damage costs, if you've gotten any public disturbances through 2020 that wasn't covered by insurance or other compensation, we can include those costs as well. And so, like I said, they've definitely broadened the expenses of what you can use. I can tell you from best practice standpoint and forgiveness, we've pretty much exclusively been able to elect the 24 weeks and use gross payroll only. And that even works the way the forgiveness calculation works. You're also, even if you have a little bit of an FTE issue, you could potentially still get 100% forgiven based off of how much expenses you have over that 24 weeks. So just kind of a best practice there to throw in. And then the requirement of the 60-40 split between payroll and non-payroll is still required. And if you, like I said, if you use 100% payroll, you're kind of meeting that requirement as well.
Yeah, and that's just made it a lot easier. I know in any applications we've helped with and reviewed. And one way I think, Matt, the easy way to think about it is they're essentially giving you 10 weeks in the 2.5, right? They're giving you 10 weeks and you've got 24 to spend it. Most businesses, unless they've had a significant FTE decline, are spending it in the 24 weeks. They really, by letting it extend to that, really helped that out.
Yeah. I want to touch base here on some simplified loan forgiveness. And this is actually what we're still waiting on a little bit, but they have come. If you remember on the first forgiveness webinar that we did, there was kind of 3 forms that you could use to apply for forgiveness. There was a 3508S form, which was called the Simplified form, and it was for loans 50,000 or less, was kind of a 1-pager. Well, they've now kind of upped that number, and it's now 150,000 or less. And so we do not actually have that application yet. The SBA had said that they had roughly 24 days from when they enacted this stimulus package to get that prepared. And then obviously we'll get that and see what that looks like. But it will be a sign and submit of a one-page submission, basically certifying that you've used the PPP round 2 money appropriately. You've kind of complied with all the requirements, and that's all she wrote. And so that's obviously really good news, because I know even if you've gone through the forgiveness process or you haven't yet, we've been able to make it easier, but it's still kind of strenuous, basically getting all those documents for payroll, things of that nature. Whereas this 150 is definitely going to be kind of a blessing in disguise when we go to do PPP round 2 forgiveness, that is. We will need to substantiate the loss of revenue when applying for forgiveness. So this is kind of the only thing that is required, which obviously this is the biggest requirement that's in addition to PPP round 1, is this 25% reduction in revenue. And so this is the only thing that we'll actually have to substantiate on the forgiveness side. So I wanted to pause there. I know we've got questions and things of that nature. To be honest with you, this is the bulk of what was in that 42-page document that came out. And so I see some questions in there. And before we kind of move on and talk about a little bit of other things before we end today's webinar, potentially looking at some credits and things of that nature, kind of want to stop. Lisa, if there's anything you want to add before we kind of go into questions, but just kind of wanted to take a good stopping point here.
I think we can go into the questions, Matt, and let's look at some of those. And then, like you said, I know we've got a couple of things left on here, but let's talk about some questions that may bring some other things up. Well, I'll lead in this while you're looking at questions. A question that we've had from clients already, so I don't know if it's going to be in our chat boxes, but we've had several clients who've really had a change in their business, like they added another location or they sold off a portion of their business. And there is no detail in the guidance that says how to address that. So unfortunately, what we're left with is 25% is 25%. They don't really care that you added a new location in 2020. You're still going to compare your total company revenues to your total company revenues for that same period in 19. So that's been a little bit hard because we did have some clients open up additional locations, and it just really is giving us no guidance that you're allowed to throw something like that out. Technically, we're not comparing apples and apples, but unfortunately, I think they're looking at it as just sales to sales. They don't really care the makeup of it. So that's been one hard question we've had to deal with, I know, this week already.
So we do have some questions here in the questions, and then also there's some in the chat feature here. So I'm ciphering through these and we'll go back and forth between each of them. The first question here: if we received and spent all of our first PPP loan, can the amount of the second PPP loan exceed the amount of the first, or do the two amounts have to be the same?
I've not seen that, but our advice would be then if something obviously may have been wrong on, well, if you're using the same payroll period, yes, I think it could be more if your 2020 payroll is more than 19. But if you're using the same period, if you're still using 19 to fill out PPP2 and you come up with a different number than you did when you did the original application, our advice would be to figure out how we need to amend PPP1 to get you the extra money. If you're going to use the 19 as your highest year of wages, technically 1 and 2 should be the same. And if you haven't been forgiven on 1, you should be able to fix number 1 and get the additional amount for number 2. Yeah, I think if you've been forgiven for number 1, I think your PPP2 application can be the amount it really should be. So I would say, yes, I think it could be more. I've not seen anything that says it can't. There's just a lot of moving parts to where your PPP1 status is, whether or not you can change that.
No,
Matt,
very
I don't
good.
know if that sound good?
Yeah, no, very good points. I think it's all going to kind of depend on which periods you're using, and you kind of start with that. And so if it's 19, like you mentioned, it's pretty much be the same number unless we miscalculated on the front end, which then we need to go back and try to get you that extra that you need to get on PPP.
And I mean, given the state, I think that's going to be a very one-off case where 2020 payroll is going to be higher than 19. Everybody we've dealt with this week already on the beginning of this process, we've used the same 19 period to calculate PPP2 because they just had more wages in 19 than, people can't work right. There's been people that can't work because of daycares and kids at home with school, and people's payrolls just have tended to not be as much as they were in 19.
Question here, 25% gross receipts based on earned income. And is that stated in the current law? Is that correct? Is that what I think that's what they were trying to see, if that's what we were stating or not.
I think it kind of goes back to the one screen, Matt, that, it's not, I don't know what the term earned income technically is meaning. It's because earned income normally means non-passive income. But if we go back to the screen, Matt had interest and dividends in it. So those technically aren't earned income, but they count for the gross receipts test. So it's really just your total sales, right? Whatever business line you're in, your total sales plus those other interest and dividend type things.
Let's see here. Talking about a staffing company. Obviously, this on the first round, this was kind of one of the gray areas that kind of had to get some extra guidance here. But for this entity, it looks like as a staffing company, their clients were able to use the employees on their PPP loan. So the staffing company only used it for the admin and office employees. And so they're just making sure with the 300 employee new threshold for eligible companies in the second round, can we consider just our office employees in that count, since the staff W-2 employees are now being included on the clients?
I would think so. I mean, that's just a gray area. My gut would tell me that would go. I kind of look at those staffed employees being cost of goods sold, right? I mean, that's really what it is. It's not necessarily wages of your company, but they never gave a whole lot of guidance on those for that specific industry. But if you were able to get it through with the first one, I would think that's still what you would count on.
Yeah, no, we actually have had, I think there's 2 or 3 that I can remember that we actually had some help with consulting regarding, and they had actually done that, and they went through the first round fine, and 2 of them have actually already been forgiven. So I'm assuming if they were forgiven, then obviously it's kind of a known situation that I think you probably do on PPP round 2 as well. Question here, we are told some area banks are telling second draw customers that they must have already submitted their forgiveness application for round 1 before applying for round 2. That is not how the second draw application is worded.
Right. I think what we saw just said that you have had to have spent it or would have spent it before the second one is dispersed.
Yeah, that's correct. It has, I believe there's no wording whatsoever that talks about when the forgiveness application has to be submitted. I can tell you from the first round, there's another question here I think I'm going to answer at the same time. What is the requirement of when the first round has to be submitted for forgiveness, PPP1, and that's 10 months after your covered period. So technically, if you're using that 24-week covered period, and if you were later in the world of getting your PPP loan, say June, around then, I mean, we're going to have until July of 2021 technically to apply for forgiveness. So I guess I would push back on the bank a little bit and say, no, that's not what's actually in the guidance, or even on the application, as you mentioned in that question. Did you say we can use 2020's payroll to figure our loan amount? And that's a yes, you can, but like Lisa mentioned, usually so far it's been 2019, usually the higher, but yes, you can use 2020's payroll to figure your loan amount. Are the comparisons for quarters or for consecutive 3-month periods?
I think it says quarters.
Mm-hmm.
Again, if you're a fiscal year taxpayer, there's no guidance on that, but we have done it by calendar quarters. That's what it refers to.
A question here says, on the EIDL loan, couldn't small business apply, receive the $150,000 and sit on it for up to 2 years as a line of credit? If not used and paid back in time, there's no prepaid penalty. I believe that's their question.
I think that's right. If you were able to get one of those, we saw very, very few of those come through. So I'll be honest, I haven't had a whole lot of experience with those over that $10,000 grant amount, but I know they were out there, and I do think you had the 2 years on the EIDL. But I also thought some of those EIDLs went out for 30 years.
I agree. There was different terms on them for sure.
Yeah.
Years. So if you have a specific question and we didn't answer that one, please reach out to us and we'll definitely get you into more detail there. Can you go into more detail about how you can get the PPP1 and PPP2 loans for the same client?
Yeah, and I think I also saw a question, how long do you have to file for PPP1? So on the first slide, I think the PPP1 amount for the amount allocated for PPP1 is pretty low. So if you did not apply for PPP1 and think you should, I think you should probably fast track that one a little bit more, just because there's just such a small amount allocated for opening back up PPP1. But I assume you should be able to apply for them both at the same time. I don't know why you can't, because even if you're applying for PPP1, Matt, I'm thinking out loud here, do you pick your covered period, still go back to,
Yeah, so basically if you were, the way I read it in the 42 pages is if you were eligible for PPP1, basically you would have gotten it back in the first round. And so your cover period is going to be back in 2020.
So you would still have already spent it to be able to apply for number 2.
Correct, yes. And so basically,
it's not like you're picking your covered period to start when you get the money.
Correct, right. Like I think of the Schedule Fs, where they kind of made that adjustment for the Schedule Fs, and now it's on gross income instead of net income. So they didn't have, obviously, the ability to apply in the first round at all. So they're going to have to go back, and then obviously they've already spent that in 2020. So then they're going to get PPP round 2 if they've got that 25% reduction.
Yeah,
so
they haven't in black and white told us how that, I guess that's a retrospective covered period, but that's how I would understand it too. We could be wrong, and we've all been wrong and made assumptions as that some of this has went along, but I don't know how they could hold you to these rules that you could get both of them and not let your covered period be the past.
Question here. If your cloud computing costs, email, and accounting softwares were being incurred prior to COVID, then can those also be included?
So for PPP2, I don't think it matters when it started, right? It just says that's an eligible cost. But I will say out of probably 200 and some applications we've done, We maybe have had to use expenses other than payroll on one or two. It's not that many, less than 10 for sure. I feel confident.
I think we have a little bit of a two-part credit question here as well. If you took the employee retention credit, can you receive PPP2 loan?
Yes, and we've got a slide. We've got an employee retention credit seminar coming up next week because there's been some big changes there. And we'll allude to that a little bit, but yes, I think so. You just can't use the same wages to seek forgiveness for PPP2 as that you seek to get the credit, right? You've got to have enough wages to cover PPP1, PPP2, and any extra wages you have per employee, I think you can get the credit for. So it's going to be a lot of moving part calculations and how do you allocate that out pro rata to forgiveness and credits that we'll have to figure out. But yes, I think you can definitely do that. And Beth out of our Louisville office, one of our partners, she's going to go over employee retention credit next week.
Question here, can you use the new forgiveness form for the PPP round 1? And so that if you actually go look at both applications, so there's two, there's kind of an updated one for PPP1 and there's one for PPP2. The PPP2 obviously has a part for the quarter comparison on the actual application. And so it's a little bit different than what is on the PPP1. So it'll be two different applications. So that should help answer that question there. What do you do if your bank isn't doing PPP second draws yet? Do you use another bank or do I just wait?
You know, I think that's a comfort level. You know, we know banks that are going to be doing it next week. Feel pretty confident of that. We've talked to some, so we definitely can help you. It's probably going to be a little more cumbersome for you to change banks because then you're going to have all that documentation again for your payroll and stuff. But chances are, if you have it pulled together, it shouldn't be that hard. You know, I don't feel like there's going to be a huge rush of running out of money. If I felt like there was a huge rush of running out of money, I would probably tell you to switch. But if you think it's just a week decision, couple weeks, I would probably tend to stay. But it's just a personal preference, right? It's just easier to deal with people you've always done. But definitely, we had clients that had banks that weren't doing it, and we had to shuffle them to some other lenders, and we felt that went really well and pretty seamless and pretty easy. So if you're not sure what to do, just give us a call. We've got some good contacts where we did so many that they can help you through the process pretty painless, I think.
Question here, is there any talk about FTEs that decreased from initial PPP payroll amount to now? Will that affect forgiveness if the numbers have decreased?
Possibly, yes, we think, right?
Yes.
That was, we've had some heartburn over that because the 42-page document really doesn't refer. It refers that everything's back to PPP1 guidance, which includes FTEs, but they really never mention FTEs at all in PPP2. They talk about the 25% reduction and that you still have to spend it in the 60-40 payroll other expense split. But our main contact at the AICPA that we reached out to says that's been, you know, on the front ground with PPP legislation, says she fully expects the FTE to be there. We just don't know the measurement period. What are we going to be comparing to? But again, if they give you the 24 weeks, it really hasn't mattered that much. Even on our clients that have had to lay people off, yes, we had a reduction. And let's say, you know, we had the reduction quotient comes up that we had a 25% reduction. And they got a they spent, you know, $200,000 on payroll. Then they still have $150,000 of eligible payroll expenses. And maybe their loan was only 100, it still all gets forgiven. I think that's an easy way to think about it. So even we've had several clients that their FTEs dropped, but they still got it all forgiven.
Question here, if submitting quarterly financial statements, do we have to submit all quarters? And does the entire year have to show 25% less?
No, so our understanding is you only have to document and support the one quarter. That's all we plan on. I'm not going to give them more than they ask for. So if quarter two is down, that's what we plan to submit with applications for our clients. And then there will be no year requirement, which is really, we've had some discussion that, some businesses, it was just a timing difference and they've made it up by the end of the year, but that's not how the law reads. The law reads any one quarter being down. So you technically could be up for the year and have the second quarter down and still qualify the way it reads, right, Matt?
That is correct. Yep. It doesn't have to be on a year. It's basically one quarter. Let's see here. I think there's a couple nonprofit questions here. What about grant income or donations for nonprofits? Are those included in gross receipts?
And I would say yes, because those are part of your normal gross operating income items. So yes.
I think another nonprofit maybe have answered the same thing. I'm just going to read it here. As a nonprofit, fundraising is a line item on our budget. We were not able to have our in-person fundraiser, which usually raises a significant amount of funding. Would that be considered loss of revenue?
Yeah, if your fundraising is zero this year compared to 50,000 last year, it definitely would play into your calculation with any of your other program service type income. Just lump all your types of income together, and if they're down quarter over quarter 25%, you don't look at just one line item. You have to put them all together.
And then one more nonprofit question here. We are a nonprofit with substantial reserves and investments, as required by FASB. We include unrealized gains of those investments in our revenue. Are those included in our gross receipts revenue calculation?
I have not seen anything on that other than they weren't making you pick up capital gains. I know that's specifically excluded from gross receipts. So I have a hard time believing unrealized capital gains would be included. Seems to me that would fall into the same bucket. So I would be fine filing that application, leaving that off.
I would agree there as well. Question here, if it's a new business in 2020, is there a way to qualify for PPP2 since they had no revenue in 2019?
I'm going to be honest, I think I remember seeing something about that somewhere, but I do not remember the specifics on that, Matt. Do you remember anything?
Yeah, I do. I think it's a no, to be honest with you, from what I read. And if you go back and look at, I think it's one of our slides here that shows if you qualify for PPP round 2, you have to have used all of PPP round 1. And so if that's the case, then if you didn't get PPP 1, you can't really get PPP 2, unless you're going to be doing going back and getting your PPP 1, and you're one of the ones that are able to get that before the funding runs out.
That's right. I hadn't thought of it from that aspect yet.
There's a question here about this presentation. Yeah, this is going to go up on our website for sure. Like all these questions, we'll get answers to them. I will put those up there as well. So I should help answer that one question. I assume that if one line of business tanked, but the total revenue does not compute to 25% decline, then you can't take PPP 2.
That is correct. That is how we'd understand that. Matt, here's a good question I saw pop up. What documentations should be submitted to verify the 25% revenue loss? So if you're on QuickBooks, you can just run a quarterly P&L year to year. That should show it. I think Matt had a slide that said, if you're down for the year, you can always use the tax return, but puts a little pressure on us and you gathering your information to get that done. But if that's what it takes to get it done, we'll do what we can and get that taken care of. But yeah, just internal financial statements. I think they even said bank statements. So if you're a small cash basis type business, you could probably take 3 bank statements, April, May, and June of this year, or of 2020 compared to 2019, same bank statements. That would be good enough support somehow summarized.
A question here, and it might have to be someone that reaches out to us, but I think I have a small restaurant and I'm working alone and I have no employees, just me. I own the restaurant. Can I use PPP? I'm assuming apply for a PPP loan.
Probably just really depends on the entity structure of your business. So if you're a corporation and haven't paid yourself on payroll, the answer is going to be no. But if you are a Schedule C, and you had a profit in the company for 19, I guess, you could apply for it. That's the documentation you have to show is the Schedule C for 19 to apply for PPP 1.
In question here, I think can I compare Q4 of 2020 with Q2 of 2019, or does it have to be the exact same quarter?
Same quarter. So it has to be 2 to 2, Q4 to Q4.
Lisa, if I missed any on here, I'm trying to go through and make sure I've gone back and forth between the questions and the chat. So I do apologize if I've missed one.
Look back through here to see if I see any.
I think that's pretty much all of them.
There was one about does having a portion of your PPP1 loan not forgiven affect PPP2? You know, I would have to see your PPP1 to understand why none of it was forgiven, because I just wonder if something maybe wasn't wrong. And we've helped a few clients with they were doing their application and they just really, you know, if you truly didn't spend the money, the rules say you can't apply for PPP2. So, but if you spent the money, but still for some reason some of it wasn't forgiven, I don't know. That's a very unique situation, Matt. What do you think?
Yeah,
I can't think of where that would probably happen.
Yeah, I'm having trouble because if you're able to elect the 24 weeks, I mean, we've had some clients that maybe needed some more expenses put on there, but we've always gotten to kind of at least a very good number that even if you have a pretty big substantial FTE reduction, you can get it all forgiven. So I would kind of start there and then work backwards, I guess, from there would be my advice. I did see one here, Lisa, that came in. Can you go back and apply for the EIDL portion of the first round of CARES Act or PPP? I think is the first question. Initially, it was to go against the PPP forgiveness for the amount. Now I understand the EIDL does not go against and will be forgiven.
As far as I understand, I thought the EIDL is all closed now. So I've not seen anything about that opening and back up. I guess that's where I would answer that. I agree that they did say at first you had to subtract the 10,000 or whatever the number was off the forgivable amount. And then when this bill was passed, they took that away, right? I think that's when that happened. So yeah, but I as far as I know, all the idle loans are not open anymore. Matt, do you know anything different about that?
I do not. That was one. Now that I see that, I'm not. I'll probably have to go back and research that one for myself. I'm not too sure about that one. I think one came in here. If you have a non-profit organization with restricted contributions, do they count as part of the gross receipts?
My gut would say yes.
Yeah, that's a very good question. I have not seen anything in the 42 pages or the 82 pages that even references that. So maybe, hopefully, we'll get some of that on the back end next week, some more information. Luckily, I think overall, like Lisa had mentioned, there are some questions, but everything is pretty simple in terms of how we get to there. But that's a very good point of calculating your gross receipts.
Yeah, and our AICPA rep kind of told us that she really does expect everything to come out by Tuesday before the inauguration, that, you know, the Treasury's having a big changeover. So they kind of expect a lot of that to be issued by then.
I think there's a question here, in the section for miscellaneous expenses such as PPE and COVID other expenses, do we add up what we spent in 2020 or do we estimate what we are going to spend in 2.5 months in 2021 or some other way?
So those expenses are still going to be in that 8 to 24 period, whatever you elect. So, once you set that, once PPP2 is received, your weeks start counting at that point, and just depends on how long it takes you to spend the money. So if you have it all spent after 10 weeks, you can stop at that point and apply and be done. That's been the difference we've had this year, right? You only had the choice of 8 on PPP1, 8 or 24, no in between. So that's what they did, make that a little bit better, that once you've spent all the money, you can go ahead and apply for forgiveness and get it taken care of. And I guess one thing we had that was a huge thing over our last webinar, and we still had so much uncertainty of, is the tax deductibility. That has been fixed. There at the 12th hour at the end of the year, they did make that the PPP forgiven money is tax free, and you do still get to deduct the expenses that you paid with it. So it's a little bit of a double dip. We'll take it, but that was a lot of uncertainty on our last webinar that definitely has been clarified. And we didn't think to put we were just so relieved that it happened. I think we kind of didn't even think to put a slide in about that, but that has been cleared up.
A few more straggling questions coming here. How do we calculate the miscellaneous expense for PPP2? So I think maybe you're thinking of maybe these expenses going on the application for PPP2, and that will not be the case. Those are just on the forgiveness side. So the calculation for the application is still on payroll costs only, times 2.5 months would be your loan amount. So then you get to add all those expenses you used between your 8 and 24 week periods, or whichever you decide in between, on the back end for forgiveness. If PPP money runs out before you file an application, can you still apply for PPP round 2?
I don't know. I've not seen that anywhere. That's a really good question.
Yeah, I guess from looking at the requirements to be able to qualify or be eligible for PPP round 2, I would still go to that one qualification of you have to spend PPP1.
I agree. Yes,
So,
you don't get the money unless they give a little waiver or a little caveat on the back end. I just don't think you'll be eligible for PPP2 at all unless you get one. So
I agree.
if you're in that boat, like I said, that is the smaller bucket of money. I would advise you to recommend you get that done as soon as possible. So I think we had one more slide, Matt, right?
Yes.
Yeah. So we alluded to it a little bit, but we do have the employee retention credit. Like I mentioned, Beth's going to do a webinar next Friday at 10:30 on that. Big thing was before, if you got PPP1, you couldn't get the credit, and they've clarified a lot of that. So we really believe there is a chance that there's going to be some people that can go back and get the credit for 2020. And then you can also look forward to the credit in 2021 because it's even a little bit more lenient in that. But Beth is going to go over that next Friday. So watch for emails or and get signed up for that. And then also we'll have our HR director, Lisa Markham, in that webinar and talk about the updates to the changes to emergency pay sick leave. I know I've had some questions about should we continue this, should we not, because some of it's employer optional now. So she's going to go over some really good points that you need to consider in looking at that. So make sure you join that webinar. Some really good information, and in the right situation, I think that could really be a good boost to clients with this payroll tax credit. Matt, anything else you can think of?
I can't. Hopefully this has been helpful for everyone. I know it's kind of, I went across the hall to talk to Lisa the other day and said this is a little bit like deja vu all over again. I thought we were doing this almost a year ago now. So I guess we'll do it all over again, and we're definitely here to help for sure. So if you have any questions further, please reach out to maybe Lisa or I, and we can definitely try to get you those questions answered as quickly as possible.
Yeah, and just, we're here. We'll help you with your application. We'll review what you've done if you want to try it on your own, whatever you need. We're here to help, and we just want to make everybody's, we just want all businesses to survive this and do better and put this behind us. So if this is part of that, we're glad to help. So if you need anything, please reach out. We are here. So we appreciate everybody joining today. Had a good crowd, and email us any questions. The recording will be up on the website as well. I think you'll get an email or a link about that. So, and we'll try to get written answers to most of the questions we answered today. We'll get those up as well. Give us a few days. There's quite a few questions. So, but in the meantime, if you need anything, please reach out. We appreciate everybody attending. And hopefully 2021 is off to a better start for everybody. Thank you.